Another key stock that's in focus, that's Astra Micro. Now the company has raised 174 crore rupees via warrants. Radhakishan Damani has participated in the fundraise and committed close to 50 crore rupees. Let's go across to Anushi of why this is a significant development. Anushi.
Right. So firstly, I'll start off with what the update is for Astra Microwave. Now here the board has approved, as you've mentioned, 174 crore of a fundraise. This is via the convertible warrants route that we are looking at. This warrant subscription price was at rupees 864. So comparing that to the current market price, that's yesterday's close, if we take, we are seeing about a 21% of a discount compared to what the warrant price is. Do note that this warrant tenure is not to exceed 18 months. So if you are seeing now here, the participation is from Damani, Radhakishan Damani, brother of Radhakishan Damani, wherein if his warrants are converted to equity, they hold about 0.6% of stake in the company. Along with that, we have some other notable HNI names as well, which include Suresh Kumar Samani, Atim Kambra, and Ratnabali Equity as well. Now, even the promoter, if we see Renuka Chitrakar, his share would increase to 3.11% as well. Now, do note that Radhakishan Damani did hold a stake in this company, but this was last seen in March 23 levels. It was more than 1% stake that we'd seen. But since then, if it's below 1% or level or so, or he's completely exited the position, is something that is yet to be certain. But what may interest Damani in Astra Microwave, a couple of factors playing into it. Firstly, the company is a key player in radars and subsystems. We've already seen how this has played an important role in Operation Sindoor. Strong growth prospects. Now they're expecting a 15 to 20% of a revenue growth in FY26. Even if you look at the order book, which stood at roughly the size of 2,300 crore, this is as of the December 24 figure that we're looking at. Management expects overall a stronger pipeline, seeing about a 20% of a growth in their order book by FY27 onwards. Along with that, even the margins are expected to increase. This is with higher margin domestic orders as compared to the exports which are there. Now, quickly just walking through the valuation picture, if we see valuations for this stock is not on the cheaper side. Trailing PE, if we look at, that is 76 times. This is as compared to 3-year average PE of 63 times that we are looking at. Even if we see in terms of warrant subscription price, that indicates a multiple of 61 times. This is if we take the 864 warrant price, which is somewhat in line with the average PE of 63 times, but lower than the trailing PE of 76 times that we are looking at. So overall, 174 crore of a fundraise. Now, whether they utilize this for general corporate purposes or for projects is something that we should be keeping our eye out for.
Thanks for that, Anushi. Lancelot, just want to talk to you about both BEL as well as, something like Astra Micro. Let's start with Astra Micro first. It's a stock that we don't talk about a lot, but has been gaining strength to strength. We've seen these private defense plays do very well. Someone like Azad Engineering has also been doing well. Solar Industry also came out with strong earnings. Any view that you have on these stocks? And we'll get to BEL also in just a bit.
So, Puneet, the defense plays or the private defense companies, you've seen the stock prices rise significantly in the short term, especially after, the performance of various, missile systems and radar systems in the recent, India-Pakistan conflict. And that has probably been driven more by sentiment than on the basis of valuation. Now, if you look at even the warrant conversion, it's at 843 rupees. It's at probably 20%, 15% discount to the current market price. And, given that the companies, while it receives all this money, the orders and the execution is still going to take time, as well as, we may not see that high margins generated in the business going forward. So even if you look at the current margin systems, the current net operating margins is about 8 to 10%. If you look at on a gross basis, on EBITDA margin is about, 18 to 20%. So given that kind of financial, let's say, indicators, the price is a little expensive at this point in time. So I think there's a lot of, hope riding on these stocks, but one needs to be a little careful at what time and what price one buys into these stocks.